Okay, welcome everyone. We'll start our lesson 3. Today lesson will go through our LO3 learning outcome 3. As you know me, my name is Sattar. If you have any question, drop me email anjum@ukversity.co.uk and I'll try my best to get back to you as soon as possible. Today lesson we'll go through the capital gain tax. So which is, please, we need to be really applied the rates which we had a discussion in lesson 1, lesson 2, and today we'll go through our lesson 3. So during our last lesson and lessons, we discuss about types of tax: income tax, non-saving, saving income, property income, personal allowance, NI, tax rate, benefit in kind, and we had a discussion about popular people chat in office. So 5 professional code of ethics which we need to be follow, and we discuss about residency rules as well, resident or non-resident, and the tax rate applied to. We had a discussion aim of this unit, and we discuss about today lesson: indicative content, be able to account for capital gain tax, chargeable gains, allowable asset, chargeable gains, and allowable person, connected person, chattels, vesting chattels rules, and we'll go through the calculation and the chargeable gains, allowable losses, calculation of the gain and losses arising from the disposal of the shares, calculation of the capital gain. Overall discussion will cover all these assessment criteria. So let's please we'll discuss. The question is, scale 1 to 10, how much you know about the chargeable gain? Have you deal with the gain? If you're doing tax returns, normally you're dealing with these, so most of you working, of course, day in and out, you're dealing with the clients, and if you're dealing with the clients, you have to be well aware of the chargeable gain, especially if you have the taxable clients. So we had a discussion about in the previously scope of corporation tax. We had a discussion about value added tax and the rates. Please, Finance Act 2023 we are applying. So rates is 12,570. The no tax personal allowance. If you earn more than that, you have to pay 20% tax. So if you get the dividend is 8.75, and the higher rate will be 40%, and additional rate will be 45%. That's which we need to apply. Okay, so personal allowance, which is 12,570, transferable amount is 1260. You can transfer if you have you're not working like husband, and yeah, we can look around the income limits, 100,000, which we can. And please, if you're earning more than 125,140, your personal allowance will finish. So on all amount, tax will be calculated. So that's the tax planning purposes which you can advise to clients if you want to. It's good to have awareness. Tax planning is illegal, but we can, in a legal pyramid, we can advise to the client what impact will be on your income and the taxes and things, and how much tax liability will be keeping in view of your income brackets. Okay, so benefit which we can look around. Property income, we had a discussion. 100% income, finance car are subject to the basic rate restrictions. Car benefit, car fuel, company van benefit, individual saving account, rent, a room relief, which is available up to 7,500, rent a roof relief. Okay, so pension limit, which we can look around, and then of course, the capital allowance, and we'll go through today capital gain tax and capital allowance, which we can, corporation tax, marginal relief. We had a discussion in the previously, value added tax, which is VAT, inherent tax, which is inherently properties, and relief, and capital gain tax. So annual exempt amount is 6,000 if you have the tax. Normal rate is, lower rate is 10%, higher rate is 20%. And the gain tax, please. Residential properties lower rate 18%. The higher rate is 28%. The investor relief, which we can if you're investing money into, and then rate of tax is 10%. The business asset disposal relief, lifetime relief, which we can look around million, and then we can look around the rate, which is 10%. So that's then we discuss about last lesson insurance and penalties if you deliberately. Okay, so today lesson, the connected person for these purposes is include the spouse, civil partners, parent, grandparent, and remote such as sister, children, grandchildren, and further issues, brother and sister and spouse. These can be connected person. The chargeable gain include the personal possessions, which is worth of more than 6,000. So up to 6,000, if you have a gain on these, that's exempt. Any property which is not your main home or the shares other than held, for tax-free scheme for investment or the business asset allowable cost. In working out the chargeable gain, you deduct any allowable cost. Any allowable cost, guys, you have to focus. The private motor car, including vintage car, which we can give to the UK registered charities, can be some government security. The personal belonging, the chattels where sales proceed values given away are less than 6,000. The price and the bidding and the cash held, that's which we can assess, though we can assess according to the schemes which we need to be. Okay, please, who's going to pay these? Is resident, UK non-resident tax, individual in the UK tax year less than 16 days, 46 days, 91 days. So work full time, automatically UK resident 183 days. If you live outside your residency, huge impact. So residence, significant ties, we can look around the close families in the UK, spouse, civil partners, minor accommodation in the UK, substantive work in the UK, we can individual in the UK in the tax year less than 60 days, 46 days, 91 days. That's which we need to be previously resident in the UK and one of last 3 years. And C, which we can look around not previously resident in the UK from last year. Consider first 4 ties like the domicile, which we mentioned here. Okay? So these are 4 ties. Yes, close family members, spouse, accommodation in the UK, substantial work, days in the UK last 6 years. Yes, and country ties mostly spent in the UK, the time spent. So capital gain tax is charged when there is the chargeable disposal or the chargeable asset, chargeable person, disposal of which we can look around, and the gift of the asset. So however, the transfer of the asset upon the death is an exempt disposal, and the person who inherited and property will take over its value the time of the death. So individual pay the capital gain tax based on the chargeable gain tax year, and the chargeable gain required 3 essential: chargeable disposal, chargeable person, and chargeable asset. So we can look around chargeable disposal, sales, gifts, exchange, loss. Yes, can be exempt, disposal if you're giving property to the tax to the charity. Are you making the trust? So the chargeable gain is the British, the term which is increase the asset value between the time it's purchased and the time in sold. Like you bought a land and the land was, let's say, 5,000. No, land is at 20,000 and you gain is 15,000. The 6,000 is exempt, and then of course more than 6, that's your gain. You have to pay the tax. So lower rate is 10% and higher rate is. So you have to look around, is the individual asset that was owned, or is it was asset was held by various other purposes. So you have to be look around in the light of these. So we have to look around these perspective. Okay, so what we need to do, we need to be make sure, guys, sorry, we need to be look around the allowable and reduce the chargeable gain in inflation into account. That's we need to be keep in mind. Okay, so the lower rate and the high rate for the chargeable capital gain. So 10% and 20% if you're using the Finance Act 2023-24 is almost the rates not changed in these years. So please you can follow whichever Finance Act you are following. Chargeable gain is a tax at the lower rate is 10% and the higher rate which we just mentioned earlier. So you have to be look around. Yeah. So you have to look around the 28%. Yeah. So the tax, basic tax bench, of course, hello, welcome, good afternoon.
Hello.
Hello, good afternoon. How are you keep?
Afternoon. I'm fine.
Thanks for
Sorry,
joining. Okay, so today we are discussing about capital gain tax and we looking Finance Act 2023 and today our lesson is covering about LO3, which is learning outcome 3 is all about the capital gain tax. And we had a discussion if your capital gain you have the 6,000 is exempt. If you have more than 6,000 the tax rate will apply. The basic is 10%, higher is 20% for individual, and we can look around for companies 18% and 28%. Of course the bracket which we have 37,700, that's which we need to be look around the capital gain tax and the rates which we can apply accordingly. Okay, so next lesson when we'll do the assignment discussion, so we'll look, lot of examples how we can include in a, because it's not exam based here, it's assignment based. So really we need to be make sure we include the examples. Okay, of course when who is eligible to pay the capital gain tax or should pay the capital gain tax, anyone who's a resident and had a gain, and should pay the tax, and tax planning is legal, and we need to be look around the categories like 183 days, the resident, the spouse, the family, the child with the UK, that's, should pay the capital gain tax. So it's tax planning is a legal as advisor point of view. So we can give advice to the client how they can save the tax, legal perspective, but of course, we need to be look around the ethical and morally correct as well. Okay, so which we discussed PPCIO, popular people chat in office. We had a discussion in the previously professional competencies, up to date knowledge, which we need to be if you're working in practice, and then we discuss about professional behaviors, confidentiality, integrity, and objectivity. We need to follow the professional code of ethics. Either you're a member of IFA or a member of any other accounting body. Person disposal and asset, the chargeable gain, annual exempt amount. Then if we have a capital losses, we can, and then of course the tax rate we have to apply accordingly. Okay, so next, when we'll say the chargeable person, in the individual, the company pay the corporation tax or other capital gain. Exempt person is a charities can be, which we can look around. The asset is a chargeable asset. Any capital asset which are not exempt can be chargeable. So we have to look around the categories of the asset. So exempt asset can be principal private residence. If you have, the personal cash, motor cars, some can be exempt. We can look around the certain chattels. If you have any medals or your gambling and lottery is exempt, compensation damages exempt, shares held in under sales exempt, so we have to look around national saving and investment scheme certain, any other schemes, if you're buying under those, asset can be exempt. Okay, so then we can look around the chattels, the tangible movable property, so exempt, we can look around, is it less than 50 years? Example, caravan boats, dishwashers, or TVs, or various horses and things. So we have to look around individually, and then of course we had a limit, which is 6,000 or less than 6,000. Really, we need to be. Those can be exempt if you have on the painting or various others. Okay, so whichever is Finance Act you're following, you're dealing with the clients, so we have to look around that. Chargeable gain for the years, the less tax, the years. If you have a capital losses, please, we have to minus. So now personal allowance, we have annual exempt amount, which we have 12,570 capital losses. If you have, then you have a capital gain, chargeable gain, and we can look around the amount at the basic rate band and the high rate band. If your income is fall these, and then we have to apply these rates. We look, examples as well. Okay, chargeable gain. So chargeable person, which we mentioned, individual companies, chargeable asset, all the asset unless is exempt, and chargeable disposable, any asset we dispose if we have a gain, so we have to pay the tax on it. So exempt assets, which we gave the list earlier as well, so those we need to be look around. And exempt transfer at death, the gift, to the charities can be. And let's please we look, these examples. We can apply, the which year rate, whichever year you're putting the example. So we have M as the chargeable gain from the selling quoted shares of 33,600 for the tax years 2019 and 20. Assume the MN has the tangible taxable income, other income as well, which is 4,370. Assume as the taxable income 27,855. So we can look around the chargeable gain 33,600, annual exempt limit. That year was 2019. Now we have a 12,570. We'll go through, and the chargeable gain we have after that. Then of course capital gain tax is 10% if your income is under the 37,700. So that's which we need to be all the MN capital gain fall within unused the basic rate band. That's which we need to be, because the previous year that was 37,500, now it's 37,700. So we have to look around if other taxable income, that's we need to minus, which we have in that case. And then of course we can look around how much the capital gain tax liability is 10%, and higher rate is a 20%, because he has other income as well. So that's the reason we are minus. So then we can calculate the tax liability unused the basic rate 37 minus 27,855 and minus that's the remaining. We have 9,645 in both cases, A and B. MN must pay the capital gain tax liability by 31st because the following year the year finish, and then of course the following like 31st January until we have to, and after that tax liability will be due and that interest will be charged. Okay, as we know how we working in, and let's please we move to the next. So please, part of this part of disposal, allowable, chargeable, whole asset, and A and B. So proceed from the part disposal. If you disposing of from the total asset you bought, the proportion of you selling it, the market value of the remaining part. So that's which we need to be look around. If you have the asset is being damaged, so please we can use the formulas accordingly. The proceed will be in will be any insurance or damages if we receive, so we need to be adjust those figures accordingly. The compensation received, the market value in the damage of the asset, if we have an asset those damage and we have a claim against it, that's we need to be look around within. Okay, so like please here we have the chattel, the tangible movable properties, which we can look around, as we mentioned, 6,000 or less. If we have more than that, we have to pay the taxes. And the normal portion, the capital gain restricted to, which we can use the formula as given by HMRC, the prospective. So gross proceed, we have less annual. And then if you're partly the proportion you're selling it, so please we need to be 5/3. That's the formula we have to use to calculate, which we can further look at the example. That will be clear our concept. Okay, so connected person, we had a discussion earlier. The connected person, it can be parent, child, brother, sister. Those are connected to the family, and the children and grandchildren, they can be connected person, and we need to be look around if you're inherently or you have the gain on these, the asset with transfer. So where the shares to be the same type of the company has to be acquired through the more than one purchase, we can look around. Then of course, we have to look around the indexes and the different dates of acquisition, and we have to look around the in the pool how many shares were and how many you dispose and what gain you have in the sharing pool. So how much you purchase, what was the cost, and different shares you purchased, how many you sold, and how many left. The number of shares sold and number of shares purchased, the cost to date, how much it was the costing, and that's which we can look around. And so maybe sometime is the issue can be bonus shares. So of course, technically you not generate any money from it. So those we need to be look around. If you giving, are you buying and selling shares? So those need to be treated as a total part of your shares. So like here, the right issue, 1 in 3, £10 per share. The shareholder 300 shares would be quite 100 shares at the cost of, and then of course the shares, so we have to pool them all, and then of course we have to look around the period of ownership and what gain we have and what relief we can claim against it. The proportion of the occupation include, and then of course we can look around the period of the ownership. So up to 3 years for any person, any period spent working overseas, those we need to look around the residency rule again, and that's which applied. Okay, so here please we can look around for the tax year 2019. So that's example, does not have any income on 15 June, sold antique, then of course is the chargeable gain. We have 18,800 in the years. Of course, if you're looking 2023 finance, we have to apply the rates of the current year. If you're dealing in the previous outstanding return, the things we can look around as well. Sometimes can be the clients and the chargeable gain we have, on these, so this, he sold the residential property as a result, the chargeable gain. So the chargeable tax liability which we have to calculate, so which we can look around in the next. So how much the chargeable gain we have in the year, 39,500 in the years of the personal allowance. No, we have personal allowance 12,570. So then we have other gains as well, so we can add them all and how much it, then we can look around the tax rate. So if you please, if that was the company, the rates is different, so we look around accordingly and please 10% and 20%. So if we have the 37,500, we have that was the limit, that's the basic rate, and then we'll look around the higher rates which we have. So those we can look around the capital gain tax. So we can apply the rates accordingly, and then we can calculate the tax liability. In this case, £7,710 supposed to pay. So then please, if we, the proportion of if the amount annual exempt and amount set, again, the residential property gain and the capital gain tax should be alternately be calculated, can be. So we can look around how much we have. What was, if that was the commercial property, so because the commercial is 18% the base and 28%, so those we need to apply accordingly. Okay, any question please if we have? So welcome. Okay, all those not charging the end of the result, we can look around the annual exempt, we can look around the losses, we can carry forward and we can adjust them accordingly. So please follow the scenario. In our assignment purposes, we can look around if we have a capital gain, we have a capital losses, what net gain we have. So please, so always good to be look around the annual exempt amount, because annual exempt amount is a 6,000. Of course, if you have a gain only 2,200, rest, annual exempt amount, of course, would be wasted. So it's better to be lost, carry on, and of course can be carried forward up to 5 years. That's what we need to be look around accordingly for the tax planning, which is illegal. We can. Okay, so then annual exempt and the capital losses brought forward if we have the following years. So 18,000, 12,000 is annual exempt limit. Personal allowance 6,000 if we have a losses, so we can look around the gain what we have. So is as individuals. Okay, so as I already send you the during our lesson one, and these are few extra resources we can use. I'll reshare with you the links and the books. Those will also help you to look around according to the Finance Act 2018. So Finance Act 2020, not 18, is using, but there are the couple of examples. Depends, maybe you're going backward up to sometime text can be okay. So here, please, we have a handout of ACCA that's quite good to use. Please, you can, for your tax calculation purposes. I already shared with you some books, here is finance sector that can be, so please, that's I just shared on the chat. So we can pick an example from the book. We can apply the new rates according to the finance act in exactly same format. And next lesson, we look around our LO4, and then we'll go through the following lesson, our assignment discussion. So yes, please, any question if we have?
Yeah, I'm Harriet. I have a question. You said that you can carry your exempt up to 5 years, 6 years.
Yes, last year.
Yeah. So does that mean that if your exemption is 6,000, every year you get like 6,000, then you add the 6,000. Then if you haven't claimed for 5 years, you have like 30,000.
Yeah, let's
Is
say
that
you
how
have
it works?
let's assume in this way you have a 15,000 pound is a loss, yes,
Yeah.
and you can carry forward the loss.
Oh, okay.
First you minus your 6,000 every year,
Yeah, okay.
then you minus your loss if you have a gain. If
Oh,
you
okay.
don't have a gain that year, you can carry forward.
Oh, all right. Okay.
Because
Okay.
you can save on the tax bill, yeah, and
Yeah.
with the legal tax planning purposes, yeah.
Okay.
And that's
Right.
your weekend. And of course, other we can look around the specific categories. Some assets can be totally exempt. So of course, any gain, like if you have a national saving investment scheme or certain assets, yes, like we,
Okay.
so those can be exempted.
All right. Thank you.
Welcome. What I'll do, I'm sharing with you one booklet, yes. So if you want to look around some question on capital gain itself, some scenario is good to be, and then we can little enhance, because of course if it's not deals nowadays, of course, are calculated. You put the things accordingly. The automatic behind the scene is the formulas running. We can calculate, but it's good to be. We have some basic, understanding how the tax rate works. Okay, so that's which I just shared with you. It's a booklet, yes, that's which we can use. So please, you can download and open as well. Just show you for the sake of, so we can. Okay. So here, please, in this booklet, if we look, so we being given the chargeable gain, yes. So can be individual, and the companies, of course, we mentioned the rates, for individuals 10, 20, but for the companies can be 18 and 28, the commercial act.
Okay.
So that's please individual gains, yes, and the release. So these are the useful chapters and the lot of examples with the solution, so which we can pick, some of them.
Okay.
And
Thank you.
when we'll do assignment, so which we'll do the assignment discussion. So I'll add more examples where we can use those examples to explanation. Okay, so thanks for joining today. If you have any question, please you can ask. Otherwise, we'll keep up to here. In the next lesson, we'll go through LO4 and we'll, the following lesson assignment discussion. Any other question, please? Very welcome. Hello, any question?
No, no question. Thank you.
Okay, thank you, and have a lovely weekend.
You
Here we had a snow in Leeds. I'm not sure how the weather you're in. Huh?
okay? My side, I'm in London. It's not. It's windy, but it's not snow. It's
Oh, it's
just rain. Yeah.
we had a rain. Rain is happening now, but this morning heavy snow was, yes,
Oh,
and
okay.
the road will be clear because due to the rain. Huh? Okay, okay, enjoy and hope we'll speak you during our next lesson. Please, if you have any question, you can drop me email Anjum at University and we can deep dive into rates. It can be various scenario. Of course, we have to look around the scenario, we have to look around the rates and we can apply and we can advise to clients. Huh?
Okay. All right. Thank you.
You have a lovely week. Thanks.
You
Bye.
too. Bye. Bye.